Welcome back to the channel. So then what we look for, or what could happen next, is that, like I said, price will take out this low right here. Okay, there's liquidity resting down here. All right, and then it may turn back around, okay, because it's formed all this area of liquidity on the way to the downside, right? So let's say price, everyone out there on YouTube, this is Future Trading with Mike, and thank you for tuning in, especially if you are a new viewer to the channel. I thank everyone who's currently subscribed to the channel. You guys know I love and I appreciate the love that you give and share here on this channel. Thank you, okay? Thank you for tuning in and watching each one of the videos. Thank you for engaging in our Discord community. But let's talk about today about following institutional order flow, okay? All right? Yes, I'm not talking about reading the footprint or reading the ladder. You can simply follow what's going on by the big boys in the market. I'm talking about the banks and institutions, by simply reading and understanding what's going on your charts, okay? They leave a footprint behind, okay? When I say it, I'm gonna say that again. They leave a footprint behind. And I'm gonna show you just kind of a basic drawing using the tools here in NinjaTrader, how you can actually identify, you know, basically and trade with the institutions, you know, by simply using what's called smart money concepts, okay? Understanding and engaging what's going on in the market, being able to read. Market structure is the most important piece of trading. And I will say that again. Market structure is the most important or key piece to trading. If you do not understand market structure, okay, right now, okay, stop watching this video and go find you some good information on tools, books, whatever it is, videos, and understand and learn market structure. I mean, let it embed in your head, ingrain within your inner being, okay? Because you're going to need to know how to read and understand market structure. To me, market structure is like a painting. When you look at an image or you look at a painting, we're trying to figure out what's going on, right? The same thing when we look at our charts, okay? The market has its ebbs and flows. It's doing something, okay? It's creating a foundation, all right? And we have to understand what they are trying to accomplish, all right, in the end of things, okay? So in today's video, no more time wasted. I want to talk about today how you as a trader, regardless of what you trade, okay? I don't care if it's Forex, options, futures, stocks, whatever it is, okay? You need to understand market structure is the key, and I want to show you a little bit talk about the trades I took yesterday. I'm not going to go over each trade, but you know, if you want to be able to hold your runners, make your money, increase your profits, you're going to have to understand smart money concepts, all right? What is it that they are setting up? Look, the market makers, the banks, institutions, they are injecting money into the market to set traps just so they can go back and make money, okay? All right? So you have to understand the game that's being played, okay? And understand when they're making their moves, okay? Whenever they're making their big moves, you want to be in position and key position to follow those big moves. Now, on this channel, yes, I talk about the strategy that I've used for so many years and which has allowed me to become a great scalper and become a profitable trader. I've been trading for almost 11 years now. And, you know, I talk about the backstory of my history of trading, almost 11 years now, the first 2 years being kind of a struggle, whatever the case is. But I am appreciative and I love where I'm at in my life now as a trader. But my goal is to be able to increase my profits. And the only way to do that, like I just said, is to be able to allow your trades to run in a sense, okay? We want to capitalize on the opportunities at hand. And that's where we need to focus more so on institutional order flow and focusing on what the big boys are setting up, okay? They're setting up both traps and they're setting up moves, powerful moves in the market to where we want to be, like I said, in position to move with them. Now, I'm going to show you here on my chart, and then we'll take a look at one or two trades I took yesterday and kind of run through that so you can kind of see and understand what I'm talking about. But I just want to lay it out here on the chart first and show you what I'm talking about how you can follow, okay, the banks and institutions, okay, and be able to see those institutional moves, those plays that they're setting up in the market so you can play with them, okay? So you can position your trades and get in and increase your profits in the same light. Now, what we see here, just a basic drawing, guys, that I want to show you. Just a representation of what I'm talking about, okay? Because there's a couple of things here, as you guys already know, and what I talk about, what, kind of a step-by-step thing that I look for before I actually take a trade. I have to always see what I want to see, a break of structure, right? Break of structure is like the most important thing for me. It's a key thing in my trading supply and demand, okay? And then I also want to see where there's a gap that's left behind once price breaks that structure to the upside or downside, right? Okay, and then we look for the return or retracement back to a key area where there was aggressive, buying coming to the downside, say for instance, a retracement back, look for the gap, wait for the rejection, and take our trade, right? But first and foremost, we've got to be able to understand, the flow of the market, looking at order flow, whether the market is moving to the upside or downside, okay? All right, and I call this institutional order flow because we are following and looking at who is creating the flow of the market. When I speak of that, I mean, who's causing the power moves in the market? Who's pushing the market up? Who's driving the market down? Okay? Who's pushing the market higher to break through structure? Who's pushing the market down to break through structure? All right. So this is just a simple model of something that the market would typically do on a day. Like right here, the market's moving to the upside, right? Okay. So stay with me. The market is moving higher, making higher highs and higher lows, right? To the upside. Okay. So there's a low down here somewhere, and then it starts making these higher highs and higher lows, okay? What I want to see, okay, is I want to see a break of structure before I start to engage in any interest in taking a trade, okay? I am trying to hold and make more profit now by looking for and identifying the key areas, just not only just surrounding my strategy, looking for a break of structure and a pullback to where price had left behind an aggressive area buying or selling, where there's a gap and looking for the rejection. But I'm looking for a solid setup, and looking at the market as a whole as where are the power moves in the market, okay? Where is the greater possibility of a trade that can take place? Where does it lie at, okay? So I want to identify a major area of structure break, okay? First, price is swinging to the upside, okay? It is breaking structure as it moves to the upside. High, high, low, high, high, low, high, high, low, high. But here, it dips below, okay, and breaks structure right here to the downside. You see this area right here, 41.19 and 41.20 if you want to call it. It breaks this area here just to turn back around and break back to the upside and take structure out, okay? So to me, my eyes immediately zoom into this area right here. And then it continues going to the upside, making higher highs and higher lows. Now, here's the thing. You may ask yourself, okay, price came up here, broke structure to the downside. Could you look for a short here? Yes, possibly so, because there's supply sitting right there, right? Okay, then it turns back around, breaks to the upside. Could I look for a pullback to this area right here and take a trade off the demand area? Yes, you could. But here's the thing. Okay, let me show you this. When I saw this setup right here, to me, it's a setup. Why? Because I know the institutions are making this major move right here, okay? By doing what? Trapping traders, okay? All right? They're trapping traders. Those that sold right here, they just want to come down, collect liquidity, just to turn the market back around to do what? Go back to the upside and stop these sellers out right here. But take a look. Price breaks structure to the downside here, turns back around, takes structure out to the upside, right? So this is a key area because I'm looking at a twofold structure break here. Once here and once up here, okay? Now, me, I'm all about, increasing my probability for a nice entry, okay? So when I see something like this right here, what I call like a twofold break of structure setup here, I'm looking to really, my eyes are focused on the area because I'm waiting patient to see if price is going to come back lower and break back through this area of structure, okay? And take it back out. So it's pushed to the upside. It must have hit some area of resistance or something to the left-hand side of the chart. Okay, again, this is an example of what the market, what you can see or notify, and kind of focus on these things because you will see setups like this all the time in the market. But it's the institutions that are setting up making these moves like this, and they end up being major, powerful moves in the market if you trade them correctly. Okay, and know what you're looking for. All right, the market starts to turn around, reverse or something. It could be short term, or it could be a long term event. We don't know. But the thing about it is the market starts to move lower, making lower lows and lower highs to the downside, right? What does it do? It takes out this area of structure right here to the downside. This area where the market was pushing higher here, it took it out as it came lower, right? Okay, so let's go ahead and just kind of I'm gonna mark this area right here. I'm talking about this low right here. Okay, this is to what I consider a primary breaker structure of a low here, or a major breaker structure to the downside as it broke through this low right here. This is a major area right here. Okay, so my eye is automatically zooms in, and I'm waiting to see if price is going to come back down, break this area. Okay, so once it's done that, I am looking to see if price is going to pull back to a key area of structure. Okay, meaning definitely where there's a gap that was left as price continued breaking structure to the downside, where a gap was left, meaning aggressive selling. Okay, I'm a supply and demand style trader, so I'm looking for an area of supply now where a gap, a gap was created as it moved to the downside. Okay, all right. So now here's the thing: what you will see, okay, what you will see. Again, this is following institutional order flow. What you will see from time to time, well, not say time to time, lots of times, okay, because this is how the market moves. This is how money is being taken, collected, and put injected back into the market. You will see once price breaks a primary low like this, a key structure, a major area or low right here, what you will see is price to probably do something like this right here. Turn back around. What I'm waiting for is, for one, price to test a area of supply. It could be right here, here, because each area, if you look to as price came to the downside, push down, pull back, broke lower, pull back, push lower. But it was aggressive selling to the downside. Okay, all right, major push where a gap was created to the downside. Okay, so as the market turns back around, okay, and pushes back to the upside, then like I said before, we're looking for the market to test, pull back to or trace to some area of supply above us, and look for a continuation to the downside. Okay, because now we've got a trend formation, or whether it be intermediate or long-term move to the downside, because price is now breaking through a major area of structure. Okay, primary low here. Right, so typically what you're going to see is something like this start to happen on the when we look for that retracement or pullback to the upside, something like this happening to the upside here, pulling back, and then pushing higher, testing some area, okay, and it may pull back again, something like this right here, and maybe it's going to test this area, say for instance like right here, okay, all right, or it could test this area right here. Either way, but then what we're looking to the market to do is reject. Looking for some rejection, okay, in this area right here, all right, an area of supply, excuse me, where we have aggressive selling to the downside. Okay, so typically what I like to do is see, I'm looking for a break of a candle to the downside pretty much. So basically a bullish run to the upside here, tap it into an area of supply, okay, and then a candle break to the downside. All right, full candle break to the downside. A lot of times you'll start to see like signs of rejection when price gets up to a supply zone. And one thing I tend to like to see not happen is for when price pulls back to some supply zone or area, for it to close within the zone. Okay, or also what I do like to see is wicks of candles, which means that price is struggling to push higher. It pushes up, wicks down. Okay, pushes up, wicks down. That means it's building a form of rejection. Okay, and once you get a break of a candle to the downside, so always kind of look for signs of rejection. And one of the biggest clues is going to be if you do not get a close within that supply zone. Okay, I mean a full candle breaking or closing within the supply zone, and when you see a rejection filled by many wicks. Okay, so once we get that, what do you think is happening here as price is moving to the upside? Well, you're getting a formation of higher highs and higher lows. Okay, so price is broke structure here. Now, is it possible the price can run back to the downside here and test this area here? Sure, definitely can do so. Okay, because when price moved to the downside here, this was the last low before price started moving back to the upside and took out this high right here. Okay, broke structure back to the upside. All right, so if you're looking for a long, I would be looking for the long back around this area right here. Okay, but you got to understand the bigger overall picture of what's happening here. A primary low was broken on the way to the downside, retracement to an area of supply. So we're going to, what we're looking for is a continuation to the downside. This is how, this is institutional order flow, what you should be paying close attention to. If you're looking to hold a position or get a better setup to be able to get a better run and make more profit. Okay, so understand that piece right there. Institutional order flow. So as price is moving to the upside here, okay, then price is going to start, stair stepping its way back down to the downside. Okay, we start seeing something like this to the downside where price starts breaking lower, just kind of pulling back and then pulling down, and then maybe it comes down to this area right here, rejects this zone or this demand area, if you want to call it, right down here at the bottom. Okay, this area where there's support at, this low here, rejects it, and then you probably could look for a scalp entry back to the upside, whatever the case is. But be careful because you have support, resistance right above us, right? So my thing at this point here, I'd rather take this area of supply up here and go short because we broke this primary low right here on the move to the downside. I'm going to get a bigger bang for my buck, paying attention to the overall picture, paying attention to institutional order flow, and taking a trade at the rejection of an area, a key area supply where a gap was left behind. Okay, because price is breaking structure to the downside, breaking a primary low, pulls back to supply, and I'm looking to take the short where back down here to where liquidity rests at, right here. Remember what I said? At every low or high, there's liquidity, especially when you have equal highs or equal lows. Well, and looking at the flow of the market here, following the structure of the market, when price gets back to this area, we already see prices moving to the downside. So we just continue following the trend to the downside. Okay. So if you take like a, what am I trying to find here? Give me 1 second here, guys. Gracious, what am I looking for? A trend channel. Okay. Just take a look. Okay. So the market's doing something like this right here, right? Down to the downside, right? Pulls back, key area supply, look for the projection to take the continuation back to the downside. Simple as that. So I'm looking for the short to happen right here. I'm not saying there's anything wrong taking a long here, but you're going to make more profit and get a bigger bang for your buck if you pay attention to the overall picture. Most traders, what they do is they tend to just kind of look, at what happened right here, say for instance, versus looking at the complete overall picture, going back over here as well to kind of see what happened on the move to the upside as it came to the downside and then the retracement. Okay, well, the market was trying to push lower. It broke an area, a major area of structure, okay, to pull back, to go short, right? All right, but what do you think is happening as price is basically moving to the upside here, making these higher highs and the higher lows, okay, and then it starts to make these lower lows and lower highs? Well, on the move to the downside, we have what? Liquidity, 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 liquidity. It's forming a barrier or creating areas of liquidity. Remember I always said that the banks, institutions, they like to inject liquidity or put money into the market just to go back and, basically take it out in a sense, capture that money in the market. They know sellers are stepping in here, okay? All right, so liquidity is being created or there's liquidity being built up within the market, right? So as money is being injected into the market to push the market back to the downside, okay, and there's a formation of liquidity at every high, okay, on the pullback, okay, of every swing to the downside, what's taking place there? Liquidity is being formed. So eventually what's going to happen is price is going to break this low here, all right, at some point, and they're going to want to come back. When I say they, I'm talking about the banks, institutions, the big boys in the market are going to want to come back and start tapping in, taking out liquidity here, 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 and at the top end here, breaking these areas here. So then what we look for, or what could happen next is that, like I said, price will take out this low right here, okay, there's liquidity resting down here. All right, and then it may turn back around, okay, because it's formed all this area of liquidity on the way to the downside, right? So let's say price, finally maybe pulls back here and then breaks lower, right? Taking out this low here, all right? What is probably it could possibly do, okay, what we look for then is maybe when the market turns back around, we know at some point it's going to want to test these areas of liquidity here and take them out. And then it's going to be with the overall goal to do this right here, to come back up and take this major area of liquidity here, this high out here. Now, when will it happen? We don't know. The market could keep pushing to the downside. But what I'm paying attention to is the overall, the flow of the market, okay? And I'm looking at the overall structure of the market, what it's done. Up to the move to the upside, broke lower, pull back, go short, it's moving lower, okay? Now, you can ask yourself this question. Could you look for short entries to areas of supply when price moved to the downside? Yes. If price pulled back to maybe here, or even here, okay, or even here at the top, these are key areas of supply. As long as you have aggressive selling coming out of these zones, these swings to the downside, where there's a gap left behind. To me, a gap is aggressive selling, but it's where the market moved quick enough away from an area, but you can almost bet that not all the orders got filled. When I say, move quick enough away from an area, who do you think is doing that? I mean, when you see a pretty decent pullback followed by a nice push to the downside, it's the institutions, it's the banks. They're filling orders or trying to fill them as fast as they can, but they can't probably fill them all. Okay, so they're going to try to come back to certain key zones or areas and look to fill the rest of the orders, and that's when we as traders take our entries. Okay, yes, so you can look for pullbacks or key areas of supply, but with the overall, paying attention to the overall market structure, something could unfold that looks like this right here just as well. Let's talk about it. Price could start to then push higher, pull back, push higher. And yes, like I said, you could be looking for areas to take shorts from. But pay close attention, because as price is aiming, okay, to take out key areas on the way to the upside, it's taking out key areas of liquidity. Once it starts breaking back into this structure here and starts taking or running through areas of liquidity, breaking through it, okay, breaking structure back to the upside, it's going to focus on aiming for this area here. So we'll put a, we'll just do this. It's going to want to focus on this area here, major high right here, okay, as long as this area here. Why? Because this was the step on the move to the upside, okay, before price, when all the structure was created right here, all right? So this is the point. This right here is the aim. This right here is the target or the goal at some point they're going to aim for. This is what I call more so the intermediate high off this move back to the downside after we, if we took a pullback here to go short, to where they're going to aim for. They're going to aim for this number one, this number two, okay? Well, in a sense, this is the overall, the major area they're going to focus on trying to get back to and collect, the area of liquidity, okay? So, liquidity is rested is made on the way to the downside. They're going to run through these small areas of structure and capture or collect these areas of liquidity on the moves back to the upside. Take out this area here and take out this area here. So this is what I'm talking about when I talk about paying attention to the overall major area or structure of the market. Okay, understand what's going on as it's going pushing to the upside. Understand what's going on is making a run to the downside, pulling back, continuation. We as sellers that know what happened here, as traders, I shouldn't say sellers. I'm looking to be a seller. When the price will traces here, I want to continue. I want to take a continuation trade to the downside. Now, once it starts breaking back into this key area structure that pretty much, I guess to say, formalized or aided in the transition to the downside, it starts breaking back into this, kind of immediate area right here. Or intermediate area right here, I should say, not immediate, but intermediate area right here, starts to pull back in this area here and starts to break through these areas of liquidity. You can almost bet that price is going to start aiming for upside liquidity, okay? So, which, I like to say is buy side liquidity, okay? So, anyways, so yeah, the market at some point is going to change its focus and start to move back to the upside, taking these areas here out. So you've got to be able to understand the overall, institutional order flow, what the market is trying to accomplish. What are they really trying to accomplish at the end? Okay, the banks, institutions are looking to make powerful or big moves in the market. Okay, they're not looking for those little little small scalps or whatever the case is. And there's nothing wrong with scalping. I do it each and every day. But my goal this year and going forward is to really start to try to capitalize on bigger moves. Okay, so, and this is what I'm talking about, being able to read market structure. I've said this in like hundreds of videos, okay, about understanding the market structure, okay? So let's focus on it and take a look now at an entry or an area. I believe it was on Friday. I just want to kind of give you an example of what I was looking at, and reading the market, looking at market structure, understanding the flow of the market, and understanding, the overall picture that aided in me taking a bigger position or bigger trade on Friday. Now, what I saw was the market was running to the downside, okay? What was it doing? Making lower lows and lower highs. And I told myself at some point, the market's going to mirror itself in a sense. It may move in one direction, then it's going to turn around, and then it's going to do what? Then it's going to change direction, break through some area structure, just to pull back to go higher or whatever the case is, all right? So it's going to do what it's going to do, and we as traders just have to really understand how to move with the market, okay? Knowing where to get in and where to get out at, all right? But look at the overall structure. Here, when I saw the market moving to the downside, okay, I started focusing and seeing that the market pushed higher, okay? It broke through the swing right here, okay? So it took out structure back to the upside. Pull back, broke higher. Then what did it do? It broke lower, okay? So what did it do? Took structure out on the way to the upside just to turn back around to take structure out back to the downside, right? Right here, this low, right here, 40.63, okay? So once it did that, could you look for short entries back to the down, short entries? Yeah, you could, because it could be some area supply, but I'm paying attention to the bigger, picture here, okay? Yeah, if price pulled back and it rejected some area, retraced back and rejected some area, I would probably be looking for a short scalp, a small scalp, whatever the case is. But once price started running back to the upside right here, I was focused on, is it going to take out structure back here to the upside? Meaning take out and clear this area of liquidity right here back to the upside. And it did, okay? It took out this area of liquidity back to the upside, all right? This major area of these highs right here. So then when I focus on, I said, okay, now, what could happen? All right, I already knew price took out liquidity here, okay? I know price broke structure back to the upside. It broke through this area, this little swing right here to the upside. Yes, you can look for a pullback to demand resting right down here where it rejected at, but you got a short, you got a very, I guess a short-term scalp right there that you could, take a move off of right here and just take it back up to this area here because you have resistance above. But me, I'm looking forward to see is are they setting up for a move back to the upside? Because after I saw price start making higher highs and higher lows back to the upside, taking out this key area structure right here, after breaking this area right here, taking out this area right here, I said, okay, they're taking out now a primary high or a major high on the swing to the downside, okay? They broke through it. I'm looking for a move to the upside, okay? Number one, why? Because they took out a major area of structure right here, a major area of primary high right here. So my mind is starting to shift a little bit to possibly want to be more bullish, to go long. They broke it back to the upside. Then they turn around and they move back to the down. When I say broke it, they broke this area here. Made a high, higher low, higher high, boom, broke this area. They turn back around, break structure back to the downside because you look for a short, yes, okay. But I'm looking for an entry to go long at some point because, my mind is shifting more towards a bullish mindset because of the fact is we've taken on a major high here. So they break down, making lower lows and lower highs, okay? Now, remember what I said, once you see price break through a major or primary high or low, in this case here a high, look for a decent pullback to a key area of demand where price could reject that, all right? Reject that to then possibly go long to take it back up to the most recent high. I just showed an example of that, but there was a reverse of that and showing you that drawing, okay? But that was more so looking for the market to do what? Taking it back down to the downside, okay? In this case here, we want to take the market on a pullback after breaking through a primary or major area of a high here back to the upside, okay? All right? It took out a primary high here or major high here just to pull back to push higher, okay? So I'm a pullback here. I'm looking for an area. Price actually came all the way back down here to this area of demand, okay? Now, it may have come back, somewhere, not put all the way back, but it could have came back in anywhere, pretty much and rejected. But you also got to be mindful of, in this case here, resistance above us or whatever the case is. So, if you look for the rejection right here, remember what I said? Look, price wicked out at the bottom right here. It kept trying to push lower, wicked. That's a formation or a sign of rejection at the bottom. And basically at that point, we're looking for a candle close to the upside to go long, okay? Now, we do have resistance resting above us. So what you can do is you can go long here. And if you ask yourself, well, what can I take the long back up to? At least this little area right here. So if you got in, say, for instance, right here at 61, take it back up to like 67, 66, pick yourself up 5 points pretty easy. But what I noticed was this right here. Price rejected its zone, wicked out here at the bottom several times where it couldn't break lower and push lower. Then what happened? It pushes up, okay? It breaks through a swing area on an area of structure right here back to the upside, okay? Takes out an area. So this is a formation of a rejection right here. It breaks higher, it pulls back, showing me even more confirmation, giving more confirmation that price is rejecting and push lower. So if you go, really what you could do is just wait for the pullback after price breaks that first area where or the last swing to the downside here. Wait for the break of structure to the upside, pull back, look for the rejection, break of a candle, go long. And at this point, yes, it does come back. So you got to know where to place your stop loss at. If you're placing a hard stop in the market, whatever the case is, my stop would be below this area here, okay, pretty much. And we do see price wick out below that, okay? Why? They know liquidity is sitting right here. They know people who bought are sitting right here in this area, and they're trying to stop buyers out, right? So don't ever, like I say, put your stop unless you're very conservative and maybe you don't have much capital to put on the table, whatever the case is. Don't ever put your stop tick at the back end of where, in this case here, this is demand, or back in here, once you got the rejection to go long, don't put it tick to tick. They're going to stop you out, Look, this is about a point right here, about 4 ticks right here. So give yourself at the back end, wherever you got into the market at, give yourself several, I'm not going to tell you how many ticks because I'm not going to tell anyone how to trade, but give yourself enough room and the possibility that they come back down here to take out or wick out this area here, that they don't, take your stop loss or run your stop loss, because that's what they're doing. Their aim is to run stops to collect money, okay? So, in this case here, I don't know, maybe 8, 10 ticks, whatever the case is, or if you got in here and was, more conservative, then you got to know where to put your stop at, because they may try to run this area here, okay? So, but let's say you got in right here, okay? You're already in profit, or whatever the case is, and let's say you got out right here, you done made your profit. And maybe you're taking the second test here on a pullback, all right? Or even right here, okay? On a pullback right here. Either way, you could have got in once here, price pushed up, pulled back here, got into it again, taking it back up to here or higher, and got into, this is a second entry, a second test to get back in the market again, all right? But what I did was I knew what they were trying to accomplish after breaking this primary high here. So price pushes up, already got the confirmation of rejection here, pushes up, pulls back, second test, shows me even more confirmation that they want to push higher. So I get into a trade. My aim is to take price all the way back up here to tops up here. And that's why I think on Friday, I don't know, I think I got like a 12-point run, or maybe a little more than that it may be more than that, I'm not sure. I think it was probably my last trade of the day. But anyway, it's like a 12-point run. Not 100% sure where I got in at, but it was a nice move back to the upside here. And it could have been like a 14 or 15-point run. I'm not sure where it was, guys, but it was a nice move back to the upside overall. And looking at it, I went back to Discord. Yeah, I got into my trade right here, somewhere around 66.5. So I got 12 points on my last contract. I should have got in a little bit earlier, but I wasn't in front of my charts, really focusing on what was going on here. But yeah, you could have got in here, and then, once the market started breaking higher and pulling back, noticing that they were rejecting to push lower, you get into the market somewhere in this area here to take it back up to this high right here, and you could have picked up, a decent amount of points. This one trade would have, depending on the number of contracts, even one contract is decent amount of money for anyone, but if you got in with several contracts, you ate pretty good, okay, on Friday, okay, just on just this one setup right here. So what I'm trying to say is that you have to understand the bigger picture at hand. Institutional order flow is extremely important. I'm not talking about looking at a footprint or ladder when I'm talking about order flow. Looking at the ladder, trying to determine the number of orders hitting the market on either side of the ladder. You can read this stuff off your chart. Trust me, you can read institutional order flow by looking at the overall structure and what's trying to unfold, what's taking place, what their aim is, what their goal is in the end, by just following a naked chart, okay? But yeah, that's all I have for you guys in this video here. If you're interested in joining our Discord community, let me show you that right quick, because I do this in every video. It's right here, okay? This is the trading floor channel on the Discord. It's a channel where we as traders come together once the session is open. Future traders, okay? This channel is all about futures trading, okay? So if you trade Forex or options, whatever the case is, this channel is maybe not for you unless you trade futures as well. But what I'm trying to say is that we share our screenshots or entries or zones or levels that we're interested in trading from, and we post it here on the channel. As well as the general chat channel. It's just more so for future traders to come together and discuss topics or discuss ideas about futures trading, or maybe have questions about the futures trading markets, whatever the case is. Maybe you're a newcomer or a newbie, or maybe you just have a general question about futures trading pertaining to platforms or data feed or whatever it may be, surrounding certain markets within the future. Within futures. So you can ask questions away on the general chat, okay? Now, if you're a spammer, you're looking to come over here and start spamming on this this server or these channels, guys, you're going to be, trust me, you're going to be kicked out real quick, okay? Block, ban, whatever you want to say, but you're going to be booted real quick, trust me, okay? So don't even attempt it, okay? Because you'll find out real quick what's going to happen. But anyways, in the end of things, that's all I have for you guys in the video here. If you're interested also in any of the trading breakdown videos, the video playlist that I put together, you know, I got so many videos on the channel, so much content. I went back and actually hand selected videos and put them into a playlist that are only available for elite members, okay? Now, the elite membership, if you want to call it, is through YouTube. It's through their, I guess their tier program, I call it, the membership program. You'll find it by clicking on the join button on the homepage on the channel or the join button on any video on the channel. And there's two tiers there: the loyalty channel supporter tier, and then I think the elite member channel tier. Most everybody who signed up has signed up for the elite member channel tier, and the reason being is because you receive the trade breakdowns. When I post my trade breakdowns and discuss in detail about my trade interests, it's helped or aided so many individuals just grasp an understanding of why I take trades in certain areas. I'm a supply and demand style trader, so you know, it lets you get an inside view of my style of trading, and I explain in detail leading up to the trades I take, why I take them, and then once I'm in the trade, you know, what goes on and what happens next. Okay, so if you're interested in joining and becoming an elite member, look, it's like for the price of a cup of coffee a month. How much do you pay for coffee? You know, most people pay between $6 a day, $4 a day, $10 a day, whatever the case is. We're talking about $6.99 a month. You get the trade breakdowns as well as the playlist, as well as I do member shout outs. And it's, you know, it's just a way to support the channel, support a creator who's providing information free of charge, and just trying my best to aid people along and provide them with good content. And, you know, if you're interested in supporting the channel, I truly take my hat off and thank you guys for supporting. The interest here is supporting the channel. Of course, nobody has to, you know, support the channel if you choose not to, but look, it's helped lots of individuals. I mean, you know, who are now profitable, who are on a daily making money out of the markets, whatever the case is. You can come over to the Discord. There are people there that can vouch and say that the channel has helped them out tremendously. The content has helped them out. The strategy in which I use has helped them out. So at the end of the day, you know, hey, if you're interested in just supporting the content and receiving something for it, perks and rewards behind by joining one of the tier membership programs, I appreciate that. Again, find the join button on the homepage or on any video on the channel, and I appreciate it as well. The Discord is free. You can find the link to the Discord down in the description portion of the video. And that's all I got for you guys. I appreciate you guys tuning in, watching this video. I truly hope you found some value in the content that I put out today about institutional order flow and being able to read the charts just using your eyes and looking at what's going on in the charts. It will tell you a lot. That's all I have for you guys. I'm going to sign off here, and I'll see you guys in the next video. Remember, tomorrow is a non-trading day because it is a bank holiday, federal holiday. So I look to be back in the markets on Tuesday morning, and I will see you then. Take care and have a great rest of your weekend.